Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Equitymaster conference is the biggest gathering of some of the most elite investors. At the conference, you get to hear directly from the legends of the investing world. Investing geniuses like these talk about upcoming opportunities, threats, and give great investment guidance on making serious money. That's the reason why investors from all across the globe pay several thousands of rupees to attend Equitymaster conference every year. At this year's conference, our investing veterans Tanushree, Banerjee, and Richa Agarwal revealed an opportunity that could potentially be a groundbreaking opportunity in India in the coming decade or so. They revealed how investment opportunities like Google, Apple, Microsoft, or Amazon are starting to emerge in India, and how Indian investors can tap into these opportunities, potentially massive gains in the long term. Let's hear about it directly from Tanushree and Richa.
So, if you're reading Equitymaster, you know what our view on Zomato is, right? To many, Zomato is a game changer, probably is. To a pure value investor, if any of you have seen Mr. Aswath Damodaran's video, it's highly overvalued. And to still others, they see a very, 10, 20 years down the line kind of a business model where they will finally be revenues and they'll make up. So today, what we are going to be doing is we are going to be talking of what Tanu and Richa are finding in this space. And we'll use examples like Zomato and Nykaa to differentiate how we see this opportunity of how we as Indian investors can finally think of tapping into the tech space in its real sense. One more thing I want to add before handing it over to Tanu and Richa and taking the discussion forward is, a common concern regarding technology today is that it's already run up. And I think that comment is usually made in the context of the stocks listed in the US. I'm not sure whether Rajiv was asked that question on China, but if you looked at Chinese tech companies, for whatever reason, good or bad, they have all collapsed. They're not expensive. So the point I'm trying to make is that the Indian tech companies, right, what we're about to talk about, the Indian tech companies are basically a decade behind the big tech companies of the US. So while the American companies have already, been proven and they've delivered all the gains and now they're becoming more mature companies, the Indian tech companies have a potentially extremely long 10, 20-year runway ahead of them. And that's what kind of you have to compartmentalize in your head is you're not tapping into a tech space in the US, which is already valued at trillions and trillions of dollars, which sort of kind of moderates future return expectations, but you are tapping into a greenfield opportunity in India, which has a very long way to run and has certain characteristics which has finally made it attractive to, seasoned, disciplined, analysts like Tanu and Richa. So with that long sort of preface, I'm going to sort of ask a couple of questions to Richa and Tanu, and we'll take this forward and then we'll share with you what we are working on and give you a chance to sort of participate in that. So Tanu, let me kick it off with you. You regret not having bought shares of Google 15, 20 years back?
So see, my understanding of the tech space, the differentiation between Google and Infosys has really happened only in the last couple of years. So 15 years back anyways, I wouldn't have been in a position to, have that kind of foresight or understanding as to what really will come out of Google in the next 10, 15 years. But even if it was not about 10, 15 years, even if it was like 5 years back or 7 years back, and I think appreciating the fact that a company, a monopoly like Google can go on to spawn newer and newer businesses and reinvest its cash flows, its superb cash flows into even better return businesses. That realization came in much later for me. And that really helped me differentiate as to how the Googles and the Apples of the world will stand out compared to other technology companies. So only is that realization that allowed me to look at Indian tech businesses in a different light.
Yeah, so the point you make is very interesting. A very unique characteristics of these US tech companies is they practice creative destruction better than anyone else.
Perfect.
They are breaking their business model before anyone else can break it for them. And as luck would have it, they're all in very cash positive businesses, right? Even Amazon isn't a cash positive business. It's just that he spends all his cash, right? To break himself all over again and reinvent him. And did you say that you're starting to see elements of this in Indian companies, where they're starting to spawn multiple companies and investments?
Yes. See, like I said in my presentation early this morning also, India has had spawners. It's not that we have not had companies who have gone on to disrupt themselves and create new lines of businesses, but there are very few. A Titan is like a one-off case.
Yeah.
But in the technology space, spawning is much easier, quicker, and can be very profitable quickly, because you are not setting up plants and setting up hiring thousands of laborers. You can test a new software or launch try multiple products in the software space without investing too much capital or without risking your core business too much. So here spawning is possible at a much faster and a much more profitable way. And if that spawning does create wealth quickly, then it can be like a virtuous cycle of going from one after the other. So that is something that I am seeing in the Indian technology space now. And that segment is very interesting. Of course, not all companies that are incubating new age technology franchises are very profitable currently, but they are venturing into a space where there's huge demand. There are huge mega trends. And if they execute it well, there's a lot of money to make.
Now let us watch Richa Agarwal reveal how disruptive tech space is evolving really fast and how companies in this space are hitting multi-billion-dollar valuations in just a few years, giving investors an opportunity to make rapid gains.
Richa, you of course are the seasoned traveler and you're looking for companies no one's heard of. Is this in your space? Are you finding small companies that are starting to branch out and starting to tap into this real tech space, if you will?
Yeah, Rahul, I think this was a topic, I think disruption is the flavor of the season, and without any original plans, we all ended up speaking about disruptive factors, including an external speaker. So yeah, like I said, this tech space and this disruption space is evolving very fast. And, earlier the companies used to achieve a market cap of $10 billion over 30 years. And now this is happening just like that, even when the companies are getting listed at an immature state. So while I'm very much excited about all these front runner names like Zomato and Paytm, everything that is getting listed and that is on the line to get listed, because at some point of time, I believe that, that clarity will come in that which of them is going to be the winner that takes it all. And maybe the valuations will also be better, as we are seeing in case of China, that, maybe at one point they were expensive and after the sell-off, maybe they'll be cheap. We are seeing that in case of US, where, this DoorDash, which is kind of peer of Zomato, has lost is down almost 30% to 25%, and maybe it will be down more. But even at this point in small cap space, I have seen a lot of players that are incubating and branching out. For example, I mentioned carbon extrusion technique, which is a plastic machinery maker, and now it has branched out in energy storage solutions, and it has also received contract from two-wheeler makers, electric vehicle makers, who that contract time, and after that its valuation has seen that kind of upside. The point is that when we are picking these stocks, we were not looking at them as something which is an optionality play. We always used our conventional metrics. Okay, in the main business, how is this going to perform? But now it is happening at such a rate, and this entire front runners, they are providing that ecosystem which gives them a chance to explore into other businesses also. For example, this communication service, whenever you conduct a transaction or whenever you deal with Nykaa or Zomato, you receive some kind of OTP, or whenever you make a payment. So earlier there were not companies that were focused on this space. Now there are, which are not the front runners. They are maybe the small cap space and the mid cap space. And no matter who the main winner is, whether it is a Zomato or Swiggy or maybe some new player comes in, these companies will, because they're not exclusively serving Zomato or Swiggy, but the entire food tech delivery space, or let's say e-commerce space. So I believe that there are real opportunities, where we can be a little more certain at this stage, considering where the valuations are for the front runners. That needs to be focused on.
Now let us watch Tanushree and Richa explain the difference between an innovative business and a transactional business, and why you should always prefer investing in innovative businesses and avoid transactional businesses.
And from a bigger picture perspective, I remember discussing with you all long back that Zomato is not really a very differentiated service, right? It's whoever gives the better deal, that's how the audience will move. So you may be burning all this money on customer acquisition, and the customer may not stay with you.
Yeah, I mean, these companies are getting the valuations that they're getting, under the garb of platform or tech companies. But, ideally, I would value a platform differently if it has got some kind of customer loyalty versus, something that doesn't have it. So the thing with Zomato is that it is the only listed player. So maybe it gets the valuation that it does. But then we have Swiggy, then we have Dunzo, and, there are a lot of delivery platforms that are coming up. There is no dearth of capital or, other companies that can spawn Zomato-like model. Amazon is one example that might try with a pilot in Bangalore and, can make it big. And we have seen that happening in the international economies as well. There were initially somebody was the market leader and then it got disrupted. Also, these food tech and even the payment space, these are very new spaces for India, and the regulation is still evolving. We see that happening in even more mature market like US, where let's say the delivery fee gets capped. You never know if the payments that you have to make to all these people who deliver will be a certain minimum. And in that case, how these companies fare will be a big question, because that will make a lot of difference to the number of years in which they turn profitable, and it will also depend upon the competition.
If at all they turn profitable.
If at all they turn profitable.
So before I go to Tanu, I just want you mentioned about you look for platforms which have stickiness.
Yes.
Just so that everyone on this call understands, give me an international example of a platform that you like and where you think there is stickiness.
So stickiness is most likely, anything which is transaction based, whether it is your cab hiring service, there you will look for discounts, and whosoever offers you a better deal and has enough cabs to run and drivers to run, you will opt that. There are certain models where, which are subscription based. For example, Netflix, there would still be people, but who will go both for Netflix, let's say in India, who would go for Netflix, who would go for Amazon. But once you have paid, you have paid. Whether or not you use that service, that's a different thing. So there are different elements of it. Like in one kind of business model, there could be uncertainty related to how many users you would acquire over time, how many repetitive transactions could be there. In other case, there could be this probability factor that the number of users will be very more. But if it is transaction oriented and if you don't have any loyalty over there, then it's more of a speculation and less of a certainty. So I would rather go for certainty, because the thing with disruptive businesses is that they have the power to disrupt conventional businesses very strongly. But then they are also vulnerable to getting disrupted with other,
they may have the
new
disruptive
players
power.
Or the existing players, because all it needs is some kind of coding and some kind of capital.
They may have the disruptive power, but they may not have the staying power for themselves.
Yes.
Tanu, you want to add to this?
So, technically, platform businesses are classified into two types. If I have to go to the theory of it, there are the transaction platforms, and then there are the innovative platforms. So, a company like Google would be in the innovative platform, where it's not just about buying or paying money for every kind of service that Google gives you at every point of time. The product which the company offers, the service that the company offers, is so sticky that no matter what, you would have to, maybe the company is a monopoly or a duopoly, or the product or the service is so important to you that no matter how the company prices it, you have to, stick with that customer, that vendor. So, whereas transaction-based business, like Richa said, they are subject to a lot of volatility in margins because customers keep looking for discounts, and that the lifetime value of the customer stays low for a very prolonged period of time. It's very difficult to make profits then. So, like Richa said, we are focused on trying to look for. So India currently has a lot of transaction-based platforms. You have your companies in the matrimony space. You have your ride sharing, you have food delivery. There are a lot of companies, but the visibility of profits in most of them is not very high. So while it is easy to jump into them saying that these are the first companies to get listed and that's why they deserve a premium, but you never know how long the premiums will last or to what extent the premiums will last. Whereas if you have an innovative business, it is much easier to see why the margins could even expand, the return ratios could even expand over a period of time.
Yeah. So I think that's what everyone needs to be careful about, because sometimes the allure of a Zomato IPO is so high that people want to participate in it without really understanding what kind of a business it is. Is it transactional or innovative? I think to a layman, Zomato is an innovative business, but its business dynamics are purely transactional, right? And so I think one takeaway, if you will, is that this is a play money bucket investment. It's not your core investment till you really figure out that this company has something going for it, right? In terms of a moat, in terms of innovativeness, which can give it a very long run rate, if you will.
Now, what you saw was just a glimpse of what Tanushree and Richa revealed at Equitymaster conference. We can't reveal the entire footage here because that would be unfair to those viewers who paid several thousands of rupees to attend our conference. But if you are interested in learning about Tanushree and Richa's latest research, then here's something I would recommend to you. You see, in just a few days from now, Tanushree and Richa are holding a special event. And at this event, they are going to reveal the secret to outwitting the big players of the financial world and potentially making venture capitalist-like gains from your investment. At this event, you will also have the opportunity to grab a list of 20 stocks with VC-like profit potential. If you are interested in learning all this, then you can click the link in the description to get your free VIP ticket to this event.